Hey everybody, Chris Pulver here with another installment of my Keep It Seriously Simple Best Trading Strategies video series. In this module, we're going to talk all about trend lines. Now, previous videos you saw support and resistance. Trend lines to me are just as important. We draw them properly, we look at how price behaves in and around them, and we can buy low and we can sell high. So we're going to use the whiteboard, we're going to get into the charts, let's draw a ton of trend lines, see a ton of examples, and let's see how price is consistently bouncing off of them and breaking through them for us to trade and trade more profitably. All right, so the way that I like to draw a trend line is just to keep it really simple and connect the highs or connect the lows. So if we have price that's been in a downtrend, all you need are 2 points. So if we have a high in price, price is pushing lower, another high in price, and price is on its way down, you can connect the highs.
Connect the dots, la 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 la. Connect the dots, la 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 la. Hey!
Now, just like we did in our support and resistance videos, you can make a parallel line, and you will probably have some type of channel. Let's say that we have a low right here. You can connect these lows and create a channel like we talked about in the support and resistance video. Now, there are a couple things that I'm looking for specifically with trend lines, and that is, how do we trade them? How do we trade with them? How do we trade with breaks? I like to break this down into two sections. This is the left side of the trend line, and this is the right side of the trend line. Now, if you are fairly early, if you're early on in the trend and you're looking to sell and you have this trend line, if price does not break this trend line, you remain bearish. You sell, you remain bearish. You sell, you remain bearish. And you continue to do that until this trend line breaks. Now, when you also are looking left on your chart and you're identifying previous levels of support resistance and possibly looking for areas where the market may bottom out, doesn't matter what instrument this is. This could be in Forex, this could be in cryptos, this could be a stock, okay? But on the left side of the trend line, we are trying to trade with the current trend. It is on the right side of the trend line that we're actually looking for the confirmation and the break of that trend for us to buy low and start going the other way. So let's say that we are coming down here and we're able to get some trades. We're selling, we're making profit. We're selling, we're making profit. We're selling, we're making profit. What are we waiting for? And this is the type of price action that you're going to see when we get into the charts. I want to see price break and close higher. That's a really important step. Okay, now, a lot of times we might see bottoming formations. You're going to see a video series as well dedicated to price patterns, but there will be price patterns in and around this area. We'll probably see price retest this trend line several times before we start getting that bigger move to the upside. But a big piece of this confirmation, and that's why I say left side versus right side, okay? The left side, I call this anticipation, and I've actually talked about this for several years now, anticipation versus confirmation. Okay, now I do a lot of trading with small trade sizes anticipating where that low comes in or where that high comes in. Now the reason I keep my trade size small is because if I'm anticipating, I'm not confirming, which means that if I'm wrong, I may have to let this price go a little bit further against me before I get my confirmation to add more trades. And so in the video that I talked about growth and growing your account, and I'll spend more time in this with a trade size video and equity management video, when we are looking to buy over here, I like to add to my positions. I like to add to winning positions, but it helps us to be confirming that the market is ready to go our way. All right, so anticipation, I'm not trying to buy here and buy here and buy. I'm not trying to buy all these levels. Anticipation is, look, if I think that we have major structure over here, and this is support and resistance, and this has been in a downtrend for quite a while. If I see divergence, if I see oversold conditions, if I see structure that I'm looking to buy from, okay, then I'm anticipating that this market will offer some type of movement. Now, whether that is a full-on reversal or just a corrective move, either way, if I'm buying in this area or buying around this general area, I should see some confirmation to go my way, okay? So what does confirmation look like? Just like we talked about in support and resistance, I want to see price closing on the right side of this trend line. So if this trend line is extended here, we need to see price do the following. We might see price come up here and get rejected. This is a candlestick, so if price shows any indecision or rejections or bearish candles, it's not quite ready yet. Now, I've seen traders do this quite a bit, where they have maybe a price will spike up here, a price will spike up here, maybe price closes here and then spikes back down. What they do is they will adjust their trend lines all the time. Look, if you have price touching here, touching here, touching here, and it spikes up here, don't change your trend line to accommodate this one fake out. Because if it's multiple times here, if you have 3-4 touches in a row that are really connected, then don't modify your trend line and now change the angle and force you to wait longer for confirmation. So what we want to see instead is where, again, if I'm anticipating, which I will take trades, anticipating those lows and anticipating those highs. But in this case, if I'm looking to confirm, I need price to close above. Now, not just close above, but there's a couple ways that price behave off of this trend line break. We typically have price carving out lows, breaking above, and now I'm looking for either continuation to the upside. This might be a news announcement or something, some type of catalyst that drives price very aggressively to the upside. We might have a break in price, and it might just go. It might go very rapidly and very aggressively. The other option would be that we break and we want to be looking to buy that confirmation. This would be a small trade here for trade number 1. Okay, again, that's of course if I'm not building positions earlier. If this is confirmation, that's confirmed trade number 1. Now, if it goes higher, then I'm still going to look to add positions, and I might look for any type of pullback to add another position and then go higher. If we have another pullback, maybe another position to go higher. And I would have some type of predetermined target. Maybe it's, this high to this low. Maybe it's a midpoint. Maybe there's pivots. Maybe there's some type of structure that I can trade to. But I'm going to start building positions and adding on confirmation to be right, and add on confirmation so I can make a bigger profit without having to deal with any really drawdown or any consequences. Okay, now obviously there's risk in trading and there's going to be stop areas, but if we have a more confirmed break of the trend line, this becomes my stop area. Okay, especially on the right hand side of the trend line, even if price were to pull back and retest these lows, the odds of it going significantly lower are fairly slim. And so I'm willing to take these trades thinking that the market will go up higher and stay on that confirmed side of the trend line. Okay, so we have a couple ways to add to it. I'll just go back to this first price break. So when we have confirmed price breaking, this would be trade number 1. Now, ideally, rather than adding trades higher, I like the trade number 1 there. And if we have a pullback, I look at a kind of halfway point. If we have this low, this high, let's say this pulls back about 50%. If that pulls back about 38 to 50%, those are just simple Fibonacci numbers. If it pulls back halfway or 50%, I was like 50% is not technically a Fibonacci number, but it's the balance point. So anytime you have a low to high, 50% is a nice balance to see if this market can then use the backside of that trend line, use the retest of this trend line, and be the reason that buyers come back in, add more to that position, and see this projected move go higher. So trade 1, trade 2. I also like to consider a trade 3 at the bottom. So again, I'm working this with smaller trade size. If I have trade 1, trade 2, trade 3, I don't have a lot of risk in net position. So I mean, really my break even is going to be roughly around trade number 2 if I'm filled on all 3 of them. Let's say that at the bottom, let's say that these trade sizes collectively add up to be about 1%. If I'm willing to risk 1%, of course, that's up to you and your preferences, but a 1% risk for the probability that confirmation will get price to go our way, allowing us to take some type of profit. Now, a very simple profit target for me is a 3-wave move. So literally, this would be wave 1. I'll just outline this. And I'm going to have to start doing a bunch of erasing here. But if we have wave 1, let's say it starts here. Wave 1, 2, 3. That is a very simple corrective target. So anything up here after that third wave, that is profit. Okay? Now, if you're at a low enough point, there is certainly more upside potential. And so I don't want to limit my profit. I want to try to let my profits run. But the reality is, if I'm looking at this from a strong downtrend, and I think this has more to go, and this is just a corrective move, fine. A corrective move should be a 1, 2, 3 type corrective move. It might be a brief channel to the upside. We take our profit, we get out, and then we might look to see this continue to the downside. But the key to using this trend line is to confirm it, right? To confirm that we are breaking the trend line, to confirm that we're on the right side of the trend line. That requires price to close on the right side. Okay, now the reason that this is important is that we close on the right side. I would also like to see, take this confirmation, say on a 4-hour chart, a 1-hour chart, a daily chart, a bigger time frame, something that you would say that is a valid break of that trend line. Okay, if that's also coinciding with nice support, that'd be a great spot to show that buyers are interested. So trade number 1 there. If we pull back, trade number 2, and at the lows, trade number 3. And this is what price tends to do. We either have this break and go, we have a break, pull back and go, or we have a break and maybe a retest of the low and then go. Now, if you think of this in a 3-wave move, this might look something like this. Okay, I'll just kind of project this out in a 3-wave move. And then we'll flip this around and show it for the opposite wave if you're going in the other direction. So if this was a 3-wave move, this might be wave 1, and it keeps going 2, 3. And you have this big break to the upside trying to take profits nice and high. All right? You may also have the break, the retest, and go higher than this high, and that would be wave 1, 2, 3. Again, a corrective move. And then the other would be this. Now, this one gets it's not really tricky, but it's something to note because there's still a lot of good upside here. If we break this trend line and come all the way back down to retest, this might be a double bottom. And if that's a double bottom, we should be going not just back to this high, but also the same distance. So if this distance here, you would double that. And I'm guesstimating, but you would really double that. And so even though this might be a 1, 2, 3, if we break and go higher, we should be able to double that type of consolidation. So long story short, if you look at this high to low, let's say that this is 0, this is 100% of the move. If we pull back 50%, I'm a big believer in a lot of financial markets. The more technically sound they are, the more likely they're going to get back to something around that 50% level. So if this is a 1,000 pip move or a $100 move or whatever your ticks are, whatever this is, if the market is technically efficient, we should be able to get back somewhere around that 50%. But the key is that we confirm the break of the trend line. Okay? So let's flip this around and go the other way. And now you can start figuring out the right side versus the left side. So let's do this. We have our uptrend. All right, now again, if we are early on in the stages of this trend, if it's going up and higher, then we want to connect our trend lines off the lows, and we're looking to buy these lows and stay with this trend. But if we start noticing that up in this area, okay, we're noticing overbought conditions. That can be something as simple as a relative strength index. That can be something like a stochastic overbought. If you have your oscillators in the overbought territory, you have those 80-20 zones or 70-30 zones, those indicators that show you have overbought, oversold. An oscillator looks like that. Your relative strength index, if it's overbought, it's going to be sitting above the level. So it's overbought. Let's say I personally like to look at a lot of pivots and inefficiencies. So if we've missed pivots along the way, if we've missed balance points along the way, I'm looking for missed pivots. I'm looking for inefficiencies, which I also like to call pockets. I think I spelled that right. Inefficiencies, also known as pockets. Also, I love to see when price is making new highs, but momentum. So price versus momentum. And there's going to be a disagreement. That disagreement is known as divergence. Okay, as far as getting ready to anticipate, when I start to see these elements lining up, I feel a lot more confident that I can sell it early. I can sell it on the left-hand side of the trend line a little bit early because I have this evidence mounting up and stacking up. Then, if I'm selling early and I'm selling in anticipation, probably shortly after that will be the trend line break. Shortly after that will be the right side of the trend line in the confirmation that I'm waiting for. All right, so these are good things to look for if you want to trade a little bit earlier. The reason I like to trade a little bit earlier at times is if I have a good area to trade it and I start lining up all these reasons, I think the market's going to turn and I'll be in the trade before it actually turns, or I'll be in the trade very near to the top when it's ready to turn. And that gives me a head start and allows me to protect more profit than risk. Okay, so those are things that I'm looking for. And then once we get to the top, I'll just draw this again. Once we get to the top, okay, what are we looking for? Well, I like to look for price patterns, which will be in another video that you'll see here. So if we have a rising wedge, if we have a break of the trend line and a double top, if we have a crown pattern, a head and shoulders pattern, you name it, look for price patterns at the tops. But the key, and the name of this module, is trend lines. And so if we see price finally breaking the trend line, again, this is the left side of the trend line, this is the right side of the trend line. So say it with me. The left side is what? Anticipation, right? And the right side is what? Confirmation. If you want your trading to be stress-free, if you want to know that you're trading with confirmation and momentum and all of the good things happening on the right side of that trend line, it does require a little bit more patience, okay? Sometimes I've gotten myself into trouble by anticipating and the market just continues to go a little bit higher, sometimes a lot higher. But confirmation is where a lot of good things happen. And I always like to say this, good things happen on the right side of the trend line. If you're waiting to sell high, good things happen on the right side of the trend line, okay? So what do we want to see up here? We want to see price closing on the right side of that trend line. Oftentimes price will close and I'm looking to sell right there. That's going to be position number one. I'm also knowing that this is probably not the best entry. If I sell it right there, I can fully expect price to pull back and give me a retracement trade or pull all the way back towards these highs and give me an opportunity to sell at the top. So if I have trade one, possibly trade two, which is really a preference, I like it because if we get a break, retest, and go, trade two is a good way to get that retracement and improve your break even a little bit. Trade three is my favorite, or I should say this option three at the top. That's my favorite because if this is trade one and three, I still have a break even in the midpoint. And my stop loss is not that much higher. So as we're on the right side of the trend line, once we break these lows, we should be going, whatever this distance is, to the downside. If we look at this low to this high, let's look at some balance points around that 50% zone and go after this. If I have pivots, if I have inefficiencies, if I have structure, previous resistance becoming future support, all sorts of good technical evidence to take the trade to a specific spot. Okay, so that's what I like to see. Now, also, this will be something we'll see in the charts here. When we have trend lines, let's say price breaks the trend line. This is like a retail trader's nightmare if you don't know how to use proper trade size and equity management. Look, you can take this trade and you can have confirmed breaking or a confirmation break of the trend line. So this would be, you did everything right. You listened to Chris, right side of the trend line, confirmation, I took the trade. And then price does this. It takes out that high. Now what do we do? Okay, look at where we are on the trend line. We're still on the right-hand side. I can almost assure you that this high in price, this high in price, this high in price is probably going to disagree with momentum. And that disagreement is called divergence. And we typically see this is where a lot of traders will get stopped out right there. But if we're on the right side of the trend line, I am absolutely looking for this rejection to happen and price to still go our way, score a point here, make another corrective move to the downside. You remember me talking about that three-wave move? Well, that's what it looks like. just like that. So if we have, even if it goes to the upside, it's either a 1, 2, 3, or it's coming back up one more time, rejecting off the backside of that trend line, 1, 2, 3. That is where I'm looking to make some money. That might be that, again, 50% zone from the larger swing. Okay? So let's go, just keep this really simple. That's the name of the video series, obviously, but let's go back for a quick review, and then we'll go into the charts first for a second video. Okay? If we have a trend line, what are we looking to do if we want to buy low? If we want to buy low, we want confirmation. It's that simple. Confirmation requires the body of the candle to be on the right side of the trend line. You can take the trade on the break, that is confirmed, but trade it small enough so your stop area will be safely below. So small trade, if we pull back, small trade, if we pull back, small trade, and then we plan on a 3-wave move to the upside, at least a 3-wave move. Because remember, if we're in a downtrend and we're going to start seeing an uptrend, this is going to be a bigger move. I've found many of trades, and again, this is a great problem to have as a trader. I've found a ton of trades where I'm in here and I take a 3-wave move to the upside and I close for profit. And then the market keeps going. Okay? Now, I used to get mad. I used to be so angry at myself, like, why do you not hold these trades longer? But now I have systems that will stay in the trade. I have systems that will help me participate as long as possible in that trade. But the key that I'm looking for is I need to find that trade in the first place. Before I just start throwing systems and robots and automation or strategies at my trade, I need to find direction. My direction is all here. I can find direction on the right side of the trend line. I can find confirmation on the right side of the trend line. Okay, so it's the break of that trend line that's really important. We want to see the break and the go, the break, the retest and the go, or the break, the retest, and it might be at the same low, and it might be at a slightly lower low. But remember, if we have price here and we have price here, and it's on the right side of the trend line, this is still a great spot to be buying. Because if there's disagreement between price and momentum and all these inefficiencies of pockets and pivots and things like that, we're probably going to go up. So I love it on the right side of the trend line, and if we flip this around and do it the opposite way, it's the same thing. I hope you can see that all we're doing is we're trying to establish a trend line. We connect highs, we connect lows, that's our trend line. So if we're in an uptrend and we're wanting to sell, anticipation, confirmation. Okay, there's your break, there's your confirmation. Is it going to be this type of move where it doesn't necessarily take out a previous low? Maybe it's confirmed breaks and it goes with our little retest and lower. Maybe it goes lower. Maybe it comes back up and uses the back side of the trend line, an equal high or slightly higher high. But it's on the right side of the trend line. Okay? Now, as far as a stop area, as far as risk, if I was willing to take this area right here, all of this area, let it hit the backside of the trend line and still be okay, I'm still looking at probably a 1% risk or smaller. Okay, a lot of times I'm still trading. I'm very under leveraged when I'm trading, so a lot of times it's less than 1%. And even if it went against me and it was 1+%, I probably wouldn't close the whole position, but instead maybe I close this one and I get back in again, and then it makes the corrective move and I still get my profit back. I might take a loss here and then have a couple of positions still built in, work my way through the trade. This one becomes a small loss. This becomes a group win that I have one small loss and a group win, and I still walk away profitable. Okay? So, trend lines, I like to call them the kings of confirmation, because if you're trading anticipation, know what to look for. We're looking for price patterns. We're looking for levels to sell high and buy low, but it's the confirmation that's going to make the trading a lot easier and a lot more stress-free. To give a nice summary of our Trendlines video 1, here are the price action behaviors I'm looking for in and around those trend lines. I'm looking for the break, retest, and then the move in our favor, or the break, the retest of the high or low, or a slightly higher high or lower low, again on the right side of the trend line, and then the move in our favor, or just where price drifts and curls on the right side of the trend line and then goes our way. So this is an example of the trend line breaking. That would be confirmation. Make sure we're looking for closes on the right side of the trend line. We break, we retest, and we go. And that's if you're looking to sell high. If we're looking to buy low, we break, we retest, and we go. We also have our break,
retest of the same high or a slightly higher high. Again, that's break, retest, and then we still see our three-wave move, again, happening on the right-hand side of the trend line. Don't be the trader that gets stopped out right here at the high. Look for this high, look for this high, look for this high to disagree with price. That divergence is a really strong sign for the break of the trend line, divergence to set in, and then the sellers come in and push the market in the way that we wanted it to go. So that's our break, move into equal highs or retest the high or move slightly higher, again using the backside of the trend line as resistance, and then it goes our way. If it was the opposite direction, we break, retest the low or retest a slightly lower low, again on the right side of the trend line, look for that to be the bouncing point going our way. Look for this low and this low and this low to disagree with price. That divergence again lets us buy nice and low, break, retest, and go. We also have the curl and correction. This is where we just see the trend line has broken. And in my opinion, I think that the bears have permission to sell because we're on the right side of the trend line. It might just take a little bit longer. In fact, we might see that this break becomes some type of consolidation pattern like a rising wedge or something like this on the right-hand side. But again, good things happen on the right side of the trend line. So we break or drift on the right-hand side, and then price starts to go our way. From this low to this high, look for balance, look for missed pivots, look for inefficiencies, all these ways to get us into profit, but we're selling nice and high in those areas. And then lastly, we have that turned upside down. We just curl and break on the right-hand side. It could be a falling wedge, but we have permission to buy on the right-hand side. So we break, look for that confirmation on the right-hand side, look to add positions off those lows. This is what I really like to do. We break, look to buy the lows. So we break, we put that confirmation break for trade number 1, and then we rebuy the lows, and we have multiple times to see them test, and then price goes our way, and we make some profit. Good stuff. Trend lines are amazing. Use them as structure. We can buy low, we can sell high, and most importantly is we can trade on the right-hand side of them. We can trade a little bit here and there with anticipation when we know what we're looking for those lows and highs, and we can certainly trade a lot and add to positions when we have confirmation. So that's going to do it for video installment 1 of Trendlines. The next video is going to be into the charts and into different instruments, and we'll take a look and see what trend lines look like in real charts. See you then.